Good morning, you magnificent melonheads. Today is Thursday, February 2nd, 2023, and this morning there is green as far as the eye can see. Everything is up, bulls on parade, raging bulls, all those bull slogans all at once, all mixed together. I heard things. Well, we've got yesterday Jerome Powell's totally not dovish press conference. And yet everybody heard Powell talk yesterday and said, buy stocks, buy stocks. And then we had Facebook, Meta, whatever you want to call that company, their earnings, which were just terrible. Massive miss on earnings. A slight beat on revenue. Up 20%. Okay, massive earnings miss, up 20%. Makes sense. Why Facebook's earnings were so good, apparently, $40 billion stock buyback. That's my guess. That is why the market is just loving Facebook's earnings. They're burning through cash faster than expected with their metaverse investments. Their revenues, their earnings per share, way down year over year with that company. But a $40 billion stock back, the market really liked that. By the way, Facebook is buying back $3.6 million worth of stock for every employee they just laid off. I wonder if we're going to get any virtue signaling speeches from politicians about that, or is that just reserved for energy companies that keep the lights on? We don't need to worry about that. You guys worry about that when I just throw them out there. You guys do what you want with them. Anyway, so those are the two things that are propelling markets higher this morning, and it is massively. Today's story is dump the dollar and buy anything with it. That's what's going on in the markets. Like, get rid of your dollars and buy everything. That's what everyone's doing. Not me personally. That's not how I roll. I'm holding on to my dollars for now. But let's shrink my melon of a head and take a look at some of these numbers here. What do we got going? The S&P is up 37 points, or about 0.87%. Not so great, but pretty good. We've got the Dow is actually down 36 points right now, or 0.1%. But look at that. NASDAQ up 238 points, or 2%. So as far as big tech is concerned, I guess all our economic problems are behind them. Forget all the tens of thousands of people we're laying off. Forget that our earnings are in the toilet. Just buy our stocks, right? I guess everything is good. Forget all the red flags in the economic data. It's just nothing but prosperity over in the big tech space, as long as you're not one of the people that's getting cut from the head count, that is. But the real story here is the U.S. dollar. Check out the Dixie right now. Big red candle yesterday. We watched that in real time during my live stream while Jerome Powell was talking. And the dollar clawed back a little bit of those losses overnight, but still down massively at 101.3. Got to send a shout out to my buddy Brian Zarb from thetechnicalchartist.com. He called a 100 handle on the Dixie a long time ago while everybody was still saying, oh, dollar milkshake, Dixie to 150. Brian was calling for a retracement to 100. Brian, you're on track to be right about that one, buddy. So thank you for everything you do for the channel and all the information you share with us. This is the reason why everything is up today, folks. People are buying bonds. People are buying gold. They're buying silver. They're buying commodities. They're buying stocks. They're just trading their dollars for anything pretty much at this moment. Let's take a look at the commodity space right now. Gold having a good morning, up $16 or 0.84%. Gold was up a whole heck of a lot more. Take a look at this chart in gold. It looks like we had an attempted price smash at one point this morning, but it looks like that one ran out of steam pretty fast. Gold is threatening that 2,000 handle again. That's looking pretty good over there. And by the way, interest rates heading lower in the bond market, which we'll talk about in a second. That is very good for precious metals, which are viewed as a bond market alternative. We still have high inflation, and we have now lowering interest rates. Well, that means good for gold. When I say lowering interest rates, I'm talking about the long end of the yield curve, of course, not the short end, which the Fed is still hiking. Silver was looking good, up 90 cents right now, or 3.82%. Silver was up over $1 at one point, back comfortably above 24 bucks, sitting right now at 24.49. So congratulations to you, silver bulls. What do we got? Oil is pretty much flat this morning, up 9 cents. Natural gas finally catching a little bit of a bid, up a little more than a nickel right now at 2.53. Platinum's having a good morning, up 3.5%. So congratulations, little silver. All right, real quick, let's take a look at the oil chart here. This is something to keep an eye on. It looks like this is going back to about September. Oil is threatening to break down right now. Oil lost its 50-day moving average yesterday. We broke down below that. Now it's sitting in this little wedge pattern here that I drew. It's threatening to break down from that chart. So If this one breaks down, if we get a big move down, which I don't really expect, not with the dollar crumbling, because dollars heading lower usually drives oil prices higher. But we had another big inventory build in oil yesterday. That is now 6 consecutive weeks of both the Energy Information Administration, the government numbers, and the American Petroleum Institute, the private sector numbers, both showing inventory builds of several million barrels a week, 6 weeks in a row. Folks, our oil consumption is down. Our inventory is piling up. The economy is slowing. That's what oil markets are telling us. So keep an eye on this chart for a breakdown there. Oh, we're looking in the bond market right now. Yields are down across the board, even though didn't they just raise yields yesterday? WTF, Jack? Well, people are buying bonds. And if people are buying bonds or trading their dollars for future dollars, that means the price of that bond is going up, and that means the yields are coming down. And it looks like the yields are coming down more at the long end of the curve. We've got the 10-year yield now at 3.36, down another 3 basis points. So further inversion in the yield curve. By the way, take a look at this right here. This is looking at the 10-year Treasury yield going back to the middle of October. That blue line here where I drew the arrow, that is the 200-day moving average, and we are sitting right on top of that thing right now. A break below the 200-day moving average would signal a big move to the downside coming in the 10-year Treasury yield, which would be very good for the housing market. It would be very bad for people who are trying to fight inflation, namely the Fed. So keep an eye on that one. I will have more to say about the 10-year Treasury yield in the days to come. Over in the jobs front, we've got a couple more stories about these layoffs, which we've been seeing plenty of that lately. Pinterest, not a huge number here, 150 jobs being cut at Pinterest, although that's little comfort if you're one of the 150. Just another anecdote, the job cuts continue to pile up. Pinterest, I'm not going to call Pinterest big tech, but it is a tech company and a further layoffs. Here we go. We've got Ford. Forbes is keeping a track of layoffs in real time. And yesterday, it was Rivian and FedEx were cutting jobs. We had Rivian announce 6% of their total staff, and FedEx was cutting 10% of their management staff. Again, not huge numbers here because FedEx management, that's not a huge population. Rivian, not a huge company. They're fair-sized. Probably just a couple of hundred people in both cases. But again, we're looking at the accumulation of all of these anecdotal examples turning into some serious numbers. And we got that today with the U.S. Challenger Job Cuts report saying that U.S. employers announced 102,943 job cuts in January of 2023. That is the most since September of 2020, and compared with 43,000 in December. People don't like to lay people off in December. They were waiting until January, and then they pulled the ripcord. So 100,000 job cuts in the U.S., and that is contrasted with employers announcing plans to hire 32,000 workers. So we are looking at a net loss. And take a look at this chart here. You can see these are the job cuts. Big spike right there in January. We'll see if that one continues into February. Also, another thing that kind of is contrary to the Challenger Job Cuts report is this report, initial jobless claims, continues to trend down. Well, if job cuts and layoff stories keep piling up, why are initial jobless claims trending down? Well, you have to factor in how people are counted in the jobless claims. If you get laid off from work, but you get 6 months of severance pay, then you don't qualify for unemployment benefits until after those severance payments dry up. So all of these layoffs that we're hearing about right now, the Amazon layoffs, if they're getting 4 months of severance or 6 months of severance, they're not going to hit the initial jobless claims for 6 months, for 4 months. So we could continue to see initial jobless claims ticking down even as these job cuts continue to pile up. We could see the same two things happening at the same time. And then all of a sudden, 6 months from now or 4 months from now, when all that severance dries up, wham, we get a big spike in initial jobless claims. And then a few weeks after that, a big spike in unemployment. So keep an eye out for that. We can have both happening at the same time. And where's my man KDM? Thank you, sir, very much for this super chat. KDM says, it's not a recession, it's an abscession, and we're festering in Fed pus. Wow. Wow, KDM, you really, you paint a picture with your words there, don't you? Try not to pop the Fed obsession while you're at it. Thank you very much for the colorful and biological language this morning, KDM, and for the support of the channel, sir. You are a gentleman and a scholar. All right, guys, I want to say thank you very much, KDM, for the support of the channel. Thank you to all my Patreon supporters. I had a good time talking to you guys on Zoom yesterday. It's always a pleasure. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Guys, have an awesome day. And until next time, live small and dream big.